Hello everybody, Randy Patrick here. It's time again for another video from my channel, which is Housing Bubble 2.0 News of the Week, or sometimes I like to call it another episode of As the Housing Market Turns. And let me tell you, a lot of stuff happened the past couple days and the market looks like it's turning right now. A lot of stuff on the go. Today is Friday, March the 29th, so hope everyone's having a good day. And there's actually some news that I'm not even going to bother to cover today. We'll leave it for next week because I have more important stuff today to talk about. But topics today are going to be focused on the mortgage activity, affordability, pending home sales, and the fact that Mr. Robert Shiller of the case-shiller U.S. Home Index actually spoke a few times this week, and we're going to extrapolate some of the things that he mentioned in some of his interviews. So that's the scoop for today. So mortgage rates, let's get right into them. Now we see that mortgage rates are of course moving downward now. That's no surprise. Biggest weekly mortgage rate drop in over a decade happened. The average rate for a 30-year fixed rate mortgage is 4.06%, down from 4.28% last week. A year ago it was 4.40%. Now, the Federal Reserve, this is due to the Federal Reserve's concern about prospects for slowing economic growth, and that caused investor jitters, which helped to drive down mortgage rates by the largest amounts in over 10 years. So that's great for homeowners or prospective home buyers who want to get out in the field and start looking at properties here. Now, interesting note, of course, once we have rate decreases, what increases the very next day or the very next week is applications for mortgages, of course. So applications jumped 8.9% this week from the previous week, and that's 5.7% if you look at the week comparatively year over year. Now, purchase applications rose 6% for the week. That's just 4% higher than the previous year, but the big jump was in the ReFi market, of course. So ReFis jumped 12% last week, and of course, the year-over-year ReFi jump was 8.5%. So clearly, people who are looking at this as another opportunity to equity strip or pull money out of their homes. And I look at it going, if you had your home on the marketplace or considering your home, to put it up for sale, to cash out on your equity, but you see the writing on the wall, or you kind of go, hey, prices are coming down, there's more selection, I'm not going to have bidding wars on my property, I'm not going to get my top dollar. Maybe my next opportunity is to pull out equity from my house with a refi. So that's a scoop. Now, of course, people don't refi when rates are high. Why would they? Doesn't make sense. So now that we've seen rates come down, it's more attractive, so we see an uptick in that. So that's kind of my thought on things that people who want to sell but for whatever reason have decided not to sell will probably go down this refi opportunity as opposed to selling later on. And just as a note of interest here, the average loan size hit a new limit or new record, which seems to make sense because we have properties that are traditionally expensive and have grown over the past few years, and we have a lot more mortgages that are, I guess you could say, smaller down payments or less down payment requirement. So therefore your loan balance is going to be a lot higher than it was a number of years ago. So no surprise there. Okay, pending home sales. They took a dip in February. So according to NAR, which is the National Association of Realtors, the pending home sales was down 1% February compared month over month from January of this year. Now, so that's not a heck of a lot, I admit that. The year over year count February was down 4.9%. compared to this time last year. So there has been almost a 5% decrease in pendings from the previous year. Now, NAR, of course, said that the 1% decline is not a concern, so don't be worried about that, and that the cyclical low in sales is in the past right now, but activity is not matching the frenzy we had last year. So what are they actually saying? So again, don't ignore what happened in the past because that's the past. We don't care about that. Look to the future, but we don't think it's going to be as frenzied or as lucrative or as dramatic as it was last year. So again, just trying to talk for the sake of talking, trying to say, hey, things we think are going to be okay, but don't get too excited if they don't be. That's the whole point right there. Now, for those of you who don't know, pending sales are really executed contracts, and they're a good indicator of future sales to come. So if I have my house for sale and we go into contract today, maybe in the next 30 or 60 days, we'll have a closing, and my house will be moved from the pending count to the sales count, pay count over here, and that'll be great in the future. So again, that's what pending sales are. Moving on to affordability right now. Excuse me. A lot of pollen in the air down here. We got really bad air count, so I'm having a hard time. It's been pretty bad the past few weeks. So anyway, Atom Data Solutions, which is one of my favorite places for getting information, released their Q1 2019 Home Affordability Report. All right. Basically, it said that median home prices were not affordable for the first quarter of the average wage earner in 71% of the U.S. counties analyzed by this report. Very interesting. Now, just so you know, that was 335 out of 473 U.S. counties. I'm pretty sure the counties they are analyzing sort of are centered around the major metros across the U.S. Now, just so we all want to be clear here, the calculation is based on the amount of income required to make monthly mortgage payments, insurance payments, and taxes. PITI, that's PITI, P-I-T-I, all right? Also assuming a 3% down payment on your loan and a 28% front-end debt-to-income ratio. There you go. So they're making some assumptions here to at least put it into some sort of perspective. But again, 71% of the U.S. counties analyzed are unaffordable to the average wage earner. Now, 65% of the counties posted a worsening affordability score. So it actually got less affordable than it was this time last year. So it's actually getting worse out there. And they also noted that home price appreciation is outpacing wage growth in 49% of these counties and markets. There you go. Highest share of income needed to buy a median price home. You'll be put to the test in Brooklyn, Manhattan, San Francisco, and Maui. There you go. And the most affordable places to live within all these counties is Atlantic City, Baltimore, Philadelphia, and Cleveland. So there you go. And remember what I just said about affordability when I get into this next topic here. All right. So this is something that I want to speak about in a long time. I've been waiting to hear some news, and we finally got little tidbits of it this week. So the Fed had their rate announcement end of last week, and case-shiller was released earlier this week. So we know that they're not raising rates anymore, and things are plateauing. We see some mortgage rates dropping now. And we see on the case-shiller national U.S. S&P case-shiller U.S. home price index that there still was a little bit of an annual year-over-year increase, but on a month-to-month basis, a lot of the major metros are now plateauing or showing signs of value decreasing. So 70% of those markets were doing a value decrease. So why it's interesting, because this week I found that Mr. Robert Shiller, co-creator of the case-shiller U.S. home price index, was doing the rounds at some financial conferences that he was attending and had a few interviews. And I listened to them, and what I've done is I watched 3 specific videos that I found, and I extrapolated some talking points from those videos that I want to share with you right now. So the first video was from Yahoo Finance, obviously Yahoo being the search engine website, and a little interview from them. So here's the scoop. He basically, and again, I'm giving you paragraphs of what he said, the meat and potatoes of what really went on. So he basically said that how the housing market has trends in it, and the trend right now is slower or less appreciation. Will these trends continue? Possibly they will, but realize it won't be a one-day catastrophic event. So if we're looking for an immediate housing bubble bursting and crash, he said that's probably not going to happen, so it won't be a one-day catastrophic drop. So these things do take time. He referenced the 2007 peak was actually leveling off starting in 2005. So it was going down at such a slow pace that it did not get much attention. And but when it was looking like the bubble was bursting, then the public opinion was changing. So which is going back down to bubble theory. So, if the signs are there, but things still appear like they're moving upward, we talk to ourselves and we coach ourselves and we convince ourselves that everything is good and not to worry about the negative news or the impacts of the future. We don't want to hear that. That's not comforting to us. We don't like it. We want it to grow and earn our money and do what we want to do with our house values and appreciation, etc. So, so that was happening, but he was already saying that there were signs that were there and we didn't pick up on it. And if we did, we weren't concerned about it. So again, now we're not going to see a tomorrow crash, but again, I look at whatever he says. We have to read into the lines here and take a little bit more out of it than what he's saying. So that's kind of scoop. But of course, once we had major shifts, then the public opinion changed and they started going, oh my goodness, we are in a housing bubble, it's bursting, and we have a crisis coming on here. So again, a lot of it is public opinion here. And we are not in that mood right now. So we're still in the happy, euphoric stage, yeah, there's some questions and some concerns, but we're still, in the, hey, the majority of people are thinking, hey, prices are going up, life is still good, I've got all this equity and time, property and time to get rid of it or use it. Simple as that. So he also commented on the two big houses. We spoke about that last video of how the boomer generations are having these huge McMansions. And he really said, well, these big houses, they really are part of a social status. So that generation, like the big house, check out my big house, show it off, have people over, the big house, big ego, sign of success. They were dubbed the McMansions back in that time. Well, we don't really do it anymore. We don't really build a lot of overly big houses. That's really not the trend these days. And the difference is that, people come over, you'd have gatherings, get-togethers, social events. People would see your big house, and that would be great. Well, we don't do that anymore, okay? Social media is how we communicate now, and we don't really bring people over to our house anymore. So that's not really happening as much socially. Obviously, this is an older generation with a lot of these bigger houses, and the worry is that they're going to need to sell in the future, which we did speak about last video, and who is going to buy the house? We know that the millennial generation, the next generation in line with the biggest population, is not keen on the McMansion. So he's saying that this is definitely, there could be actual declines in home prices, especially at the high end. It won't develop overnight, but there's definitely going to be some problems here. So again, we spoke about that last video. So he's sort of highlighting the fact that he sees this coming down the road. And another comment he made was, we are in what's called a sharing economy now. So we're not doing as much on our own. We're sharing. He goes, things like Uber are examples of it, Airbnb. We're doing different things where we don't have to, buy our car or use our car or rent a car. We can share rides. We can share accommodation. We can do stuff with different people. And that points to the changes in the generations and the demographics of people. So he says it's changing a lot of things, the way we do business, the way we live, etc. It's tough to estimate how this will affect home prices. It's hard to know where we are going. It's definitely a problem, though. So this is the situation with Robert Shiller, all right? Shiller, sorry. So in summary, he's stating that there are some problems sort of on the horizon right now, but we're still not quite sure how they're going to affect us, but they will become larger problems that will somehow affect the housing market. Now, I like the fact that he did mention the social media aspect. I think that's very important because when you look at the internet, and you always have the group of people who are like, yeah, we're in, like us, or this channel here, which says we're in a housing bubble and we think we know where that's going. For every one of us, we have somebody else who says, it's not the case. We're just, the sky is not falling. We're crying more than we should. And that's not, we're not reading the signs right. Well, the difference is, and this is a living example of it right now, is the fact that I'm communicating with you via social media, YouTube, as far as I'm concerned, social media in this capacity. I'm looking at your comments. People are talking about what's happening in their local market, and we're picking up some great information and great intel that otherwise we would never have, unless you're picking up the local paper or you're going to the local real estate board in the place you live to actually investigate what's going on. So I like the fact that I know what's going on in California, in Seattle, in the U.S., other parts of the U.S., in Washington, in Maryland, in Texas, in different parts of Florida. I mean, we learn a lot about what's going on, and the sentiment seems to be fairly even as far as what people are seeing. Not even, but fairly, I guess you say pro, like even keel, in the fact that this is a sort of pro housing bubble, forum, that we're kind of going down that path here. So basically, this is how our lives and lifestyles are changing. And as I said, we see it right here in this forum. So that's a concern for him, because that is, the next generations are relying on more of what we're doing right here, and they're making their minds up on how they're going to pursue their lives, and they're getting their information from this forum, these types of forums as well. Very interesting. That was video number 1. Video number 2, there's 3 videos, okay? So video number 2, he said the boom has lasted since 2012, so the current housing boom, but it doesn't feel like a boom. And why? Because he doesn't see the euphoria in this boom as in previous booms. And he stated that partly because this boom is also part of a recovery. So this boom has happened after the previous housing crisis. So you have the bubble, it bursts, it crashes, now we're recovering. So we've recovered and we're booming out of recovery now. So it's a little bit different than before. He also stated that low unemployment has been driving the housing market over the years. And it's been giving us a sense that America is becoming great again. And that encourages buying. He says, we like to flaunt our wealth, flaunt what we have, and that's really the American dream. So that's sort of his statement right there. The housing crisis after 2007 was unusually nationwide. There were so many places that were affected. It was almost across the board. But he said some metros are not showing that at this point in time, but a lot of metros seem to have a life of their own and doing different things. He mentioned Seattle as a place where he's seen, huge appreciation, and it seems to be depreciating on a quicker scale than most other locations across the country. He also mentioned the new tax law changes his enthusiasm for people on owning a house. And he said people don't get the same refunds as before. We're seeing that right now where people are saying, I didn't get the same refund, I got less of a refund, or if I didn't have to pay, now I'm paying more. That's going to change perception and change people's opinion of whether they want to purchase a house or not. And they're realizing now that things aren't as good as it was before. So having said that, he also mentioned he does not know how to forecast the housing market, but it's looking a little bit weaker now. There could be changes in sentiment towards housing that could bring prices down. And this is kind of clear right now. When he says stuff like this, he's basically saying he's unsure as to what's going to happen. How I look at it, going, he sees signs. He's never going to come out and state what he thinks really is going to happen. But when he says stuff like change in sentiment towards housing that could bring prices down, I'm kind of referring back to the fact that, it's the affordability, which I mentioned a little earlier. So we're going back to affordability now. Is affordability of housing is not just unique in the U.S. His comments were, it's a polarization around the world between the average populace and the elitists, which is interesting. All these, and he mentioned all the foreigners coming in with their huge wallets and bidding up prices. And he's not just talking about the U.S. He's talking about London and, Vancouver and Toronto, other places, Australia, a couple, other places around the world that are, experiencing some of that quick markup. He said that, they're coming in with their huge wallets, bidding up prices, and it could lead to economic instability in many places. It's a big theme in our time. I'm not sure what to do about it. It's unfortunate. And I guess that is right too, because what has fueled the unaffordability of the past few years has been the amount of capital or flight capital that has left other countries coming to North America, particularly in the U.S. here. So a lot of New York, Manhattan condos, San Francisco, Seattle, San Diego, LA, Silicon Valley, a lot of that has been from offshore money coming in to do whatever, whether it's just a place to put the money so it won't get repatriated or stolen from them where the countries are, safe haven, whether it's for future immigration, for investment, who knows what it is, but I call it flight capital. Those investors want the money to come out of their country into a property. And it's interesting to note that when people are bidding or buying up these properties, they're actually not flipping the property. So they're not really looking to buy it to quick sell and make a profit on it, because why would you bid it up to do that? Because you can't. So it really is to just obtain it and hold on to it, and that way the money has left the country and it's here in the U.S. And a lot of those countries now are kind of pulling back and are really concerned about the flight capital leaving their domain. So it's becoming an issue on that side of the world. So, so in summary, what he's kind of saying to me is that, home ownership is not as desirable as it was before for a lot of the people. Now, we know home ownership is down. It was down since the last housing crisis. We know people are fed up, as just said here, by the high prices and the bidding wars to get a property. We see that in many larger markets across the country, buyers are frustrated. They're frustrated in normal markets as well, too. We've talked about buyer fatigue, where buyers are going, buying a house is actually the most stressful event we've ever experienced to date, which shouldn't be that way. It should be a happy occasion, growth opportunity, new lifestyle, type event in your life. So that's kind of a sad thing. We know that the sentiment has changed differently. People are now affected by SALT, state and local taxes. The new tax laws are out, and and also they're relocating to different locations. There's the tax laws which affecting your mortgage deduction on your taxes, etc. So people now are looking at things from a economic perspective and a lifestyle perspective. Maybe I can go someplace else and work and make the same amount of money or more and have a better quality of life. I pay less for my home. I pay less on taxes. I don't commute and spend time getting to my job in the mega cities, and life is much easier for me. So we're seeing a lot of things that are going on. Now, with Robert Shiller, I find you have to listen to what he's saying and how he says it. There's subtle messages in how he delivers his opinion and his talking points. He's never going to come out and say, we're coming towards a housing crash, get prepared for it. He will not do that. I think that's pretty apparent. That would cause chaos in the industry. But his signs here are all warning signs. Now, this is the third and last video, all right? So just hang with me right now. So he said the current housing boom we're in is the third largest boom since 1890 of all times. And people are now starting to think that housing has become a little expensive. Funny how that kind of comes into play. This could in turn lead to a drop in home prices, but he's not ready to forecast that at this point in time. So we are always at risk for entering a recession. We've gone through the biggest expansion in history for the past 10 years, 120 months, it'll be in June. And he suggests that it's about time for a correction in the housing market. So again, kind of reading between the lines, going, we've had we've had a big boom, and people are starting to think homes are too expensive, and that could change. Home prices could drop, and it's about time for a correction. So a lot of times he's sort of saying this, answering some questions, and then they go on to the next question. So you got to listen and understand sort of what he's saying out here. Now, he talked about, with respect to a correction in the housing market, well, factors in a contraction is confidence is a big factor. So I believe that as well too. So if the consumer confidence in housing is dropping, that means they're not going to go and buy. They're not going to get mortgages. They're not going to pay high prices. They're not going to bid for properties. They're not going to buy. They're going to wait and watch till things reduce on both the interest rate level side and the home price side, until they feel comfortable that they're making a purchase that suits their economic needs. Simple as that. And really, he mentioned that housing market is remarkably trendy. And again, it's trendy, meaning it's a trend, whatever you're doing in the housing market. It's not easily tradable like stocks. So stocks you can trade, sell, buy, sell, whatever. You don't have an attachment to it. Houses, you're in it and you own it and it's physical. A lot more goes into owning a house than owning the stock. And you don't have to be professional in dealing with housing. Now, to be a stock trader and be successful, you need to have some education. He calls it a profession based. I know there's day traders that live at home, et cetera, and make some great money. But I mean, you've studied, you've learned, et cetera. It's kind of your profession. But in housing, you don't have to be one. So anybody can buy a house. You don't have to be a professional house buyer or a real estate agent or a real estate investor to actually buy and sell houses. In fact, the most people are not professional house buyers in that capacity. So he says the momentum is slowing down. There could be a reversal in home prices and a recession, but he's not giving it a probability. He's not giving it a probability of greater than 50% for this year. So there could be a reversal in home prices and a recession. There could be. He's not giving it a probability of greater than 50% this year. So, he's saying, I'm not going to bet red or black on it for this year. Maybe next year he may change his mind, or later on this year. So, again, not saying there couldn't be one, but not saying that, he's going to bet on it for this year. So, he also stated that the new tax law was not particularly sympathetic to the housing market. So here's a scoop. So that's kind of the summary of the three videos. So, I've listened to them a bunch of times, and obviously there's some more rhetoric going on, a lot of questions and answers by the interviewers. But the whole point, though, is that, he's the kind of guy that people are listening to sort of get the skinny on what's happening in the housing market. And he's, of course, non-committal, but what he's kind of saying here is he's giving these little nuggets of information. He's dropping these little tidbits that basically are saying, guys, I see it slowing down. This is how I, Randy, interpret it. You may interpret it differently, but how I look at it, he's saying a few things. He's talking about some issues that we're experiencing that will be future issues that will affect housing. He's talking a lot about consumer sentiment and confidence in the marketplace, which will majorly affect housing, and possibly it's already happening right now. And he said that we're already, we're seeing a cool off, and that typically happens in anything, whether it's a recession or just a slowdown or a market shift. You're going to see prices cooling, activity cooling, and things kind of slow down. So regardless of where this ends up, we're in a transition phase right now. And that's the most important thing to look at. So, how does this affect everybody? Well, again, the signs are there before it actually happens. So for me, I'm a big sign guy, right? Like I look at this. That's been my study. So I look at the housing market and I see certain things and I go, you know what? Yeah, new home sales are down. Existing home sales are down. All the pendings and whatever month to month, they're down. So we're seeing values plateauing and values actually starting to decline in some of the major markets. We're seeing more inventory come on the marketplace now, as people are kind of wondering, maybe I should put my house out there. We're seeing price reductions, and we now see mortgage rates, Fed capitulating and actually, coming off their stance of raising rates, and now the rest of the investor community getting scared because of what was stated and what was done by the Fed, and further rates reducing. So in a way, it's almost like we're now opening up for more house price purchases, and we'll see whether, okay, you got the rate now are you going to get the prices to drop to go along with it? So who knows? So again, we're going to see probably an uptick in activity, and that may be the precursor. We'll see it probably do this before it starts to do this again for good. So that's my opinion on the housing market right now. So there you go. Lots was spoken. Again, check it out. Just, you can start, just type in YouTube and, Robert Shiller, case-shiller, you'll start to see some videos and look at the more recent ones that came out. These are all within the past week. Yahoo Finance has one as well. So, but the point though here is the fact that he's talking, he normally doesn't talk a heck of a lot about the housing market. And now when I listen to it, I'm starting to pull certain signs out of what he's saying, that when individual little tidbits here and there in one interview, not a heck of a lot, but taking 3 interviews and sort of taking all this stuff out of it that's material, tends to make me feel that he knows exactly where this is going. He just doesn't want to say at this point in time. So as I say, buyer beware. Make sure you know what you're doing with your house purchases, house selling, investing, whatever it is. Things are changing, and it'll happen the next little while. So again, thank you very much for the views. Thank you for the likes and comments. I appreciate that. If you like the video, please share it with your friends. Please subscribe if you're not already a subscriber. That helps us grow our channel and do more of these videos. And again, I know a lot of you reached out to me, and I'm trying to respond the best I can. So if I can help you with real estate investing, with home decisions, etc. I know I'm working with a few people now, so I appreciate that opportunity. Just drop me a line. My email will be in the About Us section of the main channel page here. And that's the scoop for this week. So everyone have a great weekend, and we look forward to speaking with you next week. Thank you.